G'day folks, welcome back to Pete's Investing. It's April 18, 2024. This is the natural gas, iron ore, copper and crude oil market update. Now since our last video, Nat Gas and iron ore have risen slightly. Copper's been trending sideways and crude oil has taken a drop. If I look at the heat map, again look at the top left here, we've got natural gas, still bearish on the monthly. It's a fresh breakout on the weekly within a bullish position, and on the daily it's also been bullish for a number of days now. US crude is bullish monthly and weekly and bearish on the daily, same as high-grade copper, and iron ore is mixed still, although it looks like it may be moving towards a bullish movement on the weekly as well, possibly, plus some of the other instruments we cover in various other videos. So looking at the natural gas trend charts first, the monthly, weekly and daily. We use the CCI 150. You can see that on the monthly it's still tracking below the moving average bands. On the weekly, you can see there's a fresh breakout. Now, one thing to notice is if I maximize that, you can see the red and blue multiple moving averages there are starting to converge, and that's a weakening sign for the bearish side of it, and that's actually broken above to the bullish side, hence the bullish movement. And I'd like to see this break also on the monthly to be a lot more bullish, but so far so good in terms of bullish movement on Nat Gas. So for example, had you taken some long trades during those weeks there, would have been a few little profits you could have taken on the lower time frames, even the daily or even the lower time frames. If I zoom out onto the daily and the hourly, you can see there first off the stochastic market forecast is still oversold on the daily, and it made a couple of efforts on the hourly, and it's currently trending around the 25 level on the stochastic market forecast indicator. If I zoom in on the daily, we did have a bullish divergence here on the CCI 150, that very minor bullish divergence, but it actually came up and hit our target area quite nicely. Now there's no further divergence to talk of. That's moving in line with the price on the daily. On the hourly though, if I zoom in, I've marked the divergence with all these little rectangles just for reference for historical purposes. You can see there, for example, declining highs versus higher highs on the price, hit our target. This one fell a lot further. Another bearish divergence there, a bullish divergence there, and currently we are seeing the CCI moving in line with the price. You can see there lower lows and lower lows on the price as well. Higher lows on the price as well. So no divergence to talk of yet. But again, just be careful. I'd like to see the weekly continue on an uptrend, as obviously the daily as well, without seeing any divergence. Just again, if you do track these and you do see a bearish divergence like you saw back here, and you are tracking the lower time frames, just probably a good idea to take profits and then re-enter once the CCI starts trending up again. US crude first off on the monthly, weekly and daily. You can see there it's bullish on the monthly, still bullish on the weekly, although it's turning down towards the moving average band, so just be careful about going long. The daily is also already broken below, so it's already bearish. So again, avoid long trades until we see this break above the CCI. I'm seeing some other sentiment in terms of bearish sentiment on oil, but at the moment, these are the main indicators I'm referencing. On the daily and the hourly, you can see there it's bouncing off that 50 level of the stochastic market forecast indicator. And again, it's risen. If I draw a Fibonacci on this level, you can see there it's bouncing down just above, it broke above the 61%, but it's bouncing down from there. So that was our previous resistance at 83.12. So it's pretty much exhausted there at the moment. We need to see it break a lot higher on the daily especially. On the hourly, again, the stochastic market forecast is broken down from the overbought and reaching the 75 level. So there was a massive drop on the price in the last few hours. And in terms of divergence, again, we had a bearish divergence there. That was still registering until that point, and it fell off, hit our target area. And there was another bullish divergence here, albeit very minor, very slight. Broke up between that Fibonacci range, and it hit our target. Probably went about as far as the 50% level. And there was no divergence, and there is still no divergence on the hourly at the moment. So again, I'd like to see the daily break higher to be more bullish, Looking at this chart, I'd like to see that break higher to be more bullish and take trades on the lower time frames. High grade copper is still, well, was bullish up until last couple of days. You can see there monthly it's been bullish, weekly also likewise, and on the daily it's broken down into a bearish signal. So it may have exhausted its bull run for the time being. And you can see there on that little range there, I did a Fibonacci extension. It rested around the 100% extension first before advancing further to the 161%, and now making further declines on the weekly. Now just be careful of going long until we see this break above on the daily. On the daily and hourly analysis, you can see here on the daily, first off on the static market forecast, it's broken and bounced off that 50 level. So there's a slight bullish movement. It's hit this resistance up there at 43,568 on the hourly. It has been in the overbought territory. We haven't seen any major signs of a decline yet, hovering around that resistance area. And we had a bearish divergence here, broke down, hit our target, then bounced up again. And we could possibly count that as another bearish divergence, to be honest, because that's got lower highs. So if I was to take it up to that level versus the price, okay, from there, extending it up to there, that's still considered a bearish divergence. And if we were to draw a Fibonacci retracement, a second level retracement, you take it up to that high, you can see there's from that point, 23%, it's already just touched it. So I don't trade those because they're very hard to predict the minimum retracement. I'll use them as an exit point if I'm going long, as well as using the CCI as an indicator. I also use this as a potential telling me that it is weakening and it's probably about time to take profits. If you haven't already seen it, gold is sort of showing you a bearish divergence at the moment, so carefully going long on gold. I know it's a different video, but just for those of you that are following gold, reference that video separately. Lastly, we'll look at iron ore. Now, there's no CCI shown for the monthly, but that's probably at least a neutral, if not a bullish movement. On the weekly, it's broken up into a neutral positioning after being bearish for some time. And on the daily, it's turned bullish. So mixed signals. If you're trading this, I'd wait for this to break above weekly and be bullish on the daily to take long positions on the smaller time frames. Looking at the daily and the hourly in more detail, again, so you can see that it's fluctuating around the 50 level, so uncertain at the moment. The ADX on the daily is also showing a bullish movement. So is the CCI 150. And on the hourly, you can see they're bounced up through the 50 level. Oh, that's the static market forecast indicator after being bearish, and it's now moving higher on the hourly. And if I zoom in, you can see there it's actually, we had a few bullish divergence there versus lower lows on the price, and it bounced up, hit our target. Now this one is actually, if I measured that between that little divergence up to that point there, it's hit the target, it's actually gone up to the 100%, broken above the 100% level. So to make it a bit clearer, where do we expect this to go next? So if I draw a low there, so the divergence has already been hit, we're just now measuring potential retrace levels. So you can see there it's actually just short of the 61%, and that's a key area. If that breaks above much higher than that, we're going to see further upside. Otherwise it might start turning bearish from the 61% to the downside from here. So again, carefully wait for that to break above 61% to be more bullish. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.